Monday, April 27th, 06:10 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Starting a new week. The last week of the month of April. We have a scheduled event, a binary event, this Wednesday, the FOMC meeting, 2 p.m. Eastern time. If you don't know what the FOMC meeting is, it's a regular scheduled event from the United States Federal Reserve, aka Central Bank. So it's 2 days, 7 hours, 49 minutes, 7 seconds until that next meeting. They will vote to either change interest rates or leave them alone. Expectation right now in the market data is 100% that they will not change the rates, leave them unchanged. That being said, the unexpected is the words they're going to use when they come out and do the press release of the situation since the last FOMC meeting and expectations going forward that will have an impact on the markets. So I'm going to look at the broad markets, the futures markets, the top down. Since the markets opened last night, I saw some amazing price action. And many of my positions, I'm still considering to close before this Wednesday event. So first, we're going to take it on an intraday time frame, the 4-hour charts. This is the ES S&P 500 futures, 30 days, 4-hour charts, the current candle, done at 9 a.m. Look, we're up here at the high for the past 30 days. I'm going to put it on the past 10 days. We have a consolidation. I can extend it out further. We had a breakout to the upside last Friday from the consolidation, and overnight, again, minor consolidation. Me, I am not buying up here at the highs. I'm looking for a pullback here to consider buying it. What I do like is we had this breakout, strong big breakout, but we didn't have the continued follow through. Nope, we had a pullback. Well, this pullback formed a nice wick on the bottom. Buyers re-entering right here. Not during the regular trading hours. Not confidence. Yeah. We had a divergency here. We had a high here and a higher here. Both times rejecting it. And again, the momentum didn't continue. That's one reason I'm not buying up here. I'd rather see A+ setup and value. To me, I see more value down here. We might even break down here and go lower. But again, we had buyers stepped here. Nice consolidation, pullbacks, proof of buyers here, strong buyers. Let's go on to the next 10-year yields, which will be very well impacted. FOMC meeting. Again, when yields go higher, interest rates go lower. I'll share again, many people not situation aware. Lowering interest rates could add to inflation. Whoa, many people are not aware of that. The current situation is when you lower yields, lowering the interest rates, you can entice more people to borrow more money. Some people are not good at managing money. But again, some companies are not prepared for that. So if they get a huge inflow of customers' demand for products or services, but not enough of that product or service, but a huge demand, why would they not want to raise prices? They can make more money selling less products or services, also leading to inflation. That's just part of the inflation situation. That's a high risk. That's a high risk. Yep. You could disrupt the markets that way. It could also cause panic. People could start hoarding, leading to the black market. So back here on the 10-year yields, look at the past 30 days. A lot of whipsaw over here, massive consolidation here. Got my trend line, got a green zone down here. So looking for pullbacks in here. They come. Look for sweet spots to be buying. Now we're looking at the US dollar. Past 30 days, which had amazing price action last night. I'm still in bullish positions. Look, here's the highs past 30 days. We had that massive decline coming down to these green zones, which were already pre-situation aware. And look, we had a massive consolidation. Buyers, accumulation stepping in here. Breakout. Tested this first supply zone. Did a retracement last week. I'm going to put this in the past 10 days so you can see exactly, maybe better, how he played out last night. That big red candle, that was last evening. So again, this was last week, trending up, reverse. The end of last Friday, we went to here. This was a sweet spot, really weak. Broke through it. The continuation did not, this was last night. Went up, broke above this trend line, hit the supply zone up here, as expected, rejection. Well, that pullback hasn't come here yet. This is no longer valid. We already broke through it, so I'm going to remove it. That green line, I'm going to reduce it. Let me put this out for now, 15 days. There we go. Again, this red area on the left, where the impulse moved down, midpoint I labeled, tested it, rejected it. Strong demand brought it up there. So I'll be looking here on a retest, consider reloading more positions. A lot of whipsaw. Crude oil. Yep. See up here? Massive consolidation since Friday, holding up strong. I have positions. I'm bullish. Gold, huge consolidation. Right down here in the demand zone. I'm looking to reload more positions. Euro, again, broke above. I can move this down or reduce the length of it. There we go. Again, inverse from the dollar. Natural gas, new lows for the year Friday. I am in bullish positions, looking to add more. Silver, look at that. We're in a sweet spot, looking to add. Bitcoin, lows of last week, trending up, hitting demand zone. Strong move up. What a fake out. And again, inverse hard. Yeah, see that trend line? Has strong move up, buyers. If you look at the higher time frame, you see why it was going in there. All right, let's take it to now the top down. First, the ES. 3 grids, far right monthly, middle weekly, and the left daily. Again, this will be the end of the month. The ES, look at that big, strong candle. Broke above, making a new high for the year on the monthly. The weekly, the momentum's up. The daily chart, we already broke the highs of Friday. Coming out of this consolidation. I'm not buying at these highs. I'm buying on pullbacks. Same thing, 3 grids, left daily, middle, weekly, far right monthly. The 10-year yield. Right off the bat, look at the monthly. It's still inside candle, forming a dodgy, small trading range. That means indecision. The middle chart, the weekly. Okay, I have a Fibonacci tool added on here. We did the retracement mode. The trend is still down at the 0.318. It's in a consolidation. High probability the trend's going to reverse and go higher. Higher yields, higher interest rates. In the daily chart, yeah, consolidation. Staircase pattern down, consolidation, inside candle. On to the next. US dollar index. Monthly, the trend is down, lower highs. Big red candle inside the prior candle. And here we go on the weekly. Again, just 1 day so far. Huge reversal after that inside candle on last Friday. So we already did a retracement, breaking above the green 0.382 and nearing the 0.618. If we touch that 0.618 right here, that blue horizontal line, that means a higher probability the next time we go back down, it shouldn't break that swing low. Be putting bullish bias to the dollar. And I told you the higher time frame. So here we are looking, what I showed you earlier, the 4-hour. Look here on the daily on the far left. We had a gap down. All this blue area is the gap. And overnight, we popped into it. The gap is not filled yet, but we're inside there. And the momentum, look at this huge trading range. 1 night on the dollar coming off these lows. I think that's very important to report. I don't hear anything on the media talking about this. All right, let's go on to commodities. Do the energy first. The energy is crude oil first. Monthly chart, still inside candle. Weekly chart, yep. Last week was an inside candle. So this midpoint gray area, I'm going to remove that. It's not valid anymore. And daily chart. Look at Friday, inside candle. And since Sunday night open, inside candle. Consolidation in a base up here, coming off the lows. I'm still bullish bias. People, we're at war. Commodities are hugely impacted in wars. Natural gas. Oops. You may not be feeling the war at the home front. The markets realize them. So the far right. Yep, like I said, natural gas, new low for the year. I'm going to move this down. Didn't update that yet from close of Friday. So we're looking at the weekly chart in the middle. There we go. Again, last week was that new low for the year. And the far left, the daily, inside candle since the opening Sunday night. So you see these 2 last red candles. This second red candle on the bottom. The trading range is less than the first one. They each have big wicks on the bottom. Buyers are stepping in there, meaning a higher probability we'll have a reverse. This is a key level right here. I need to update that. I don't need to, but I want to. There we go. Huge area. Yep. All right, so we might get a pop in there. That's good. There we go. Yep. So I'll be looking again to reload, get a pop up there, take profits. Let's go to the next category. Commodities, metals. Gold. Same thing, monthly inside candle. The weekly chart, last week inside candle. We're in a big consolidation up here, and look how far it went up. Off the lows here, testing the 0.618. So again, a higher probability bullish bias. If it was to do a retracement down here, means logically it shouldn't be breaking down here. Or speculating, again, this is a Fibonacci tool I added on here. So from the bottom, it did a deep retracement. Look at top left here, where the orange horizontal line is, and the bottom, the orange horizontal line. Here's a trend down. I added the Fibonacci tool. And the ratings I have here is the green, 0.382. We broke above that. The trend was reversing, higher highs, higher lows. The red is just midpoint. That's all it is. Excuse me. It's just telling me midpoint from the trend. Where we broke above that, went to 0.618. 0.618 tells me, again, Then on retracement back to the bottom, it shouldn't break that, have a higher probability of, after coming off the highs, to continue back up here and higher probability break above here. Again, I am bullish bias gold, looking at buying the dips at key levels. In the daily chart, again, staircase pattern, higher high, consolidation. Nice strong moves here. I expect price actions this week. Could be before, during, and very likely after the FOMC meeting as well too. So you get fake outs leading up to Wednesday. Let's take it to the silver. Monthly inside candle. Look at the daily, the weekly here, similar to gold. And the daily, the far left, again, staircase pattern, higher high, and retracement. Let's take it to the last financial instrument some people are married to, Bitcoin. Currently for the month, look at that, reversed off the inside candle, higher high, higher low. It's not done yet. In the middle chart, the weekly, the gap has been tested. Went up here in the daily chart. There we go, showing rejection up here. So that's the current situation. Patience, looking at the sweet spots, good logic, not reckless trading. Thank you as always, spending just a little time with me. That's it for the video. Thanks for watching. Thank you for your support.